All right, welcome guys. Ooh. Good old soda. Well, let's begin in a couple of minutes here, maybe 1 minute here. Okay. All right, can everyone hear me fine? Hopefully the music is not too loud. Okay, so let's begin tonight's stream by talking a little bit more about where we are at right now and why we were right about SPY and IWM, right? I mean, you guys should always read the title of the stream and the description box as well, but let me just go over it with you guys if you guys didn't. So the title is Were We Right About SPY and IWM? And that is, well, the answer is correct. That we were correct, excuse me. And we are right about SPY and IWM, and I'll be speaking to you guys shortly about what we were right about. But in the description box, it says that NVDA has allowed the markets to continue its reversal higher, but SPY today has continued its formation of its momo bull flag. On the other hand, IWM has continued to show its expected relative strength, or RS, as bullish momentum holds, along with the lower call skew. And so let's talk about what happens next. Right, so basically, if you guys remember from Tuesday's stream, I told you guys that there is a slight possibility that we can be seeing some sort of a handle forming here, right? If in the event that we do not see an immediate breakout from this small micro momo bull flag. And so it seems like from yesterday's and today's price action, we might just get that, right? But that doesn't mean that we need to be bearish, right? It's simply, we're just gonna move sideways and consolidate in a more of a descending way. And so if we do get that cup and then handle before we see a breakout higher, that's completely fine. I don't care if you do that for the next week or next week or maybe even next week, because it's gonna be a short week since it's Labor Day weekend, right? We only have 4 trading days that we need to deal with for next week. Hey Joe, what's up? Whoa, welcome guys. Welcome. If you guys are just joining in, you guys haven't missed too much. I just began. Just make sure you guys are smashing that like button down below. So with SPY here, okay, what you guys need to be looking at is that, well, first of all, after NVIDIA's ER earnings event passed, which we were correct about, well, first of all, we were correct about the fact that the markets were waiting on NVIDIA. I mean, everyone knew that. But once we started to see the market fully just kind of ignoring what happened from NVIDIA's earnings, we saw IWM ramping up higher. Right, we saw IWM holding very great relative strength overnight yesterday, yesterday, and we also saw VIX futures, right, volatility coming back down overnight as well. And so we're practically on point in that perspective, but SPY is proving to be slightly difficult here because of the fact that we're not seeing that immediate breakout to the upside. I mean, we had that attempt today. However, as I've told you guys on Tuesday, we needed to see a break over the current weekly high sitting at $563.91. And today, we got really, really close, right? Only a couple cents off. So the highs of today, the high of the day was 563.68. Again, the current weekly highs that was set at, set on Monday, is sitting at 563.91. So what happens now? So today, pretty nasty looking bearish candlestick. However, it's still within the range of this momo bull flag. So I can say that for sure that we have an intermittent range between 563.50 to around 555. All right, so let me actually mark those levels here. Okay, so 555 and 563.50. Right there, bam. Okay, so that's exactly what we have right over here. Okay, now the only thing that you need to be looking out for is, again, the possibility of this happening here. All right, there's this descending consolidation where we allow the daily 21 SMA to fully catch up to the price. So and that's essentially what we could be expecting at this point, because of the fact that we continue to reject around this 563.50-ish whole number area. And that was also in the past here on July 12th, where we made that high of 563.67 and saw that immediate rejection as well on that day. And so, and then obviously, a couple of days later, right, 2 days later, we had that all-time high price print, and then the immediate waterfall move back down. And so, there's going to be a lot of supply here. And the thing is, though, even with the supply up here, right, underneath all-time highs, you guys should understand that market breadth continues to expand and make new highs, higher highs and higher lows, but continues to expand and make new highs. And so the tick reading today too was not that bad either at market open. If I go on the 2-hour time frame here, right? So I believe at open, and then at a little, maybe it was like an hour after market open, we saw the tick coming back down to like -300 and sticking around there at lows. But then obviously today, intraday, we got a nice sell-off and we saw the extreme oversold moved back down. Yeah, so like maybe an hour or two after, yeah, we hit that -300-ish tick reading here. And so basically what I'm saying here is that market internals, market breadth continues to be very strong. Now, the only thing that I did not like about today was simply for the fact that we had a nice or a nasty rejection, at least. I should rather use that word. And we had that volume associated with that pullback from 563.50. So again, number one, we failed to take out the current weekly highs sitting at 563.91, and we continued to retest this 563.50 level as a new level of resistance and rejected off it, currently making it into a new official level of resistance that we need to get past in order to hit new all-time highs. And so the second point here is that if we do continue to see this type of action, where we see an immediate move back up and an immediate move back down, we might just begin to see this consolidation where we kind of move in a descending manner, but at the same time we can continue to adhere to this range of 563.50 to 555. So as long as we're seeing this happening, let me adjust my mic here. Okay, we should be seeing the daily 21 SMA to catch up. I mean, it is a bit far away. Just from a percentage point, we're over 2% right now from the close of the daily 21 SMA, and then the daily 21 SMA and the close of today. So I mean, this is a sizable move, and I would actually welcome it if this happens. I mean, we can't see another run up into the rate cut. I've been telling everyone that already. I've been telling you guys this already. So hopefully you guys remember. And I want to see a new all-time high print before the official rate cut. And I believe the FOMC meeting days are September 19th and September 20th. Hey, welcome guys, welcome. To everyone who's just joining in, make sure you guys watch the replay, but we just began. But again, just watch the replay. And of course, make sure you guys hit that subscribe button and smash that like button down below as well. Right? So, excuse me guys. So, as this is all happening, we were correct on IWM. Why? Because of the incredible RS that is showed today. And the reason why most market makers and most smart money, big money, are most likely increasingly I have to make sure I choose the words carefully here to make it more poignant, right? That they are slowly not looking at leaders and looking more towards the laggards. So small caps and mid caps and certain groups and sectors that have been lagging. So specifically, value sectors. So, you know, IWM today clearly a show of strength, and it's clearly telling us that IWM has been leading, quote unquote, leading here, ahead of the overall benchmark markets like the S&P 500 or even NASDAQ. So we were definitely correct on this, that we continue to see IWM strength. Now, what's interesting about IWM here is that compared to that rapid breakout that we had, we did not have extreme call skew. If you guys don't know what that is, just look it up. Very, very easy to understand. And what we have now during this entire recovery and move back up from the lows after we broke below briefly this $200, excuse me guys, $200 whole number level. Okay, we saw the call skew, extreme call skew just shooting right back down. And now we have a very low call skew that will allow more of a sustained move up higher into our first rate cut. And even after the first rate cut, I still expect small caps to do extremely well. Right, they're slowly being introduced back into a lower rate environment. And I talked extensively about this the past couple of months. Even before we had this breakout back in the first 2 weeks of July, right? So make sure you guys just keep up with my videos, my streams, and you guys will understand what I'm talking about, right? Whenever I talk about a point in the past of what I've said or what I've shown you guys. So IWM, with this lower cost skew, again, there is a higher probability of us sustaining a more controlled uptrend where we see controlled higher highs and higher lows, and we might even form a nice bull flag here at this point and have that ultimate breakout towards this previous target level or resistance level of 226.50. And I'm still holding my targets here to 233, which is my next target once we do break over 226.50 rather than failing it like last time, like we saw here and here. And eventually, by the end of the year, I do have a set target to 240. It's a very conservative one, but it's the most logical one for me. And so 240 sounds like the most, you know, just literally the most logical. I mean, I don't really have any other words to it for IWM. And if we are able to see even more bullish volume on IWM, then I would say 250. That's the next logical area to go to, next logical whole number level to be magnetized by, right? So again, if you take a look at the monthly time frame for IWM, I posted this on my Twitter page as well a couple of days ago, and I posted it for my, obviously first for my my private CFO members, Discord members, but this looks extremely bullish. If you take a look at this August monthly candlestick, we have a massive wick at the bottom here, and it was just a simple retest of the daily tennis, not the daily, the week, not the weekly either, the monthly time frame, right? So this monthly time frame retest on the 10 SMA. My apologies, guys. It's clearly stating that IWM has a lot more energy left to just rapidly move up higher, and I wouldn't be surprised if September turns out to be a very, very good and very simple textbook bullish candlestick, like one of these ones, right? Or even the previous months, right? In the month of July. And all I want to see is that simple continuation of IWM to the upside in September as the the interest rate environment continues to improve. All right, does that make sense, guys? So what were we right about on? Well, everything from the initial analysis of what I provided you guys about the overall markets compared to small caps and mid caps. I've been talking about this for months. So, you know, everything is still the same. Today was the clear sign and indication that that is still the case of what I've been telling you guys for the past couple of months. So now, with NVDA earnings out of the way, and we have PCE coming in tomorrow, PCE inflation report. Here is something that you guys should remember. All right, the markets are now slowly being desensitized to inflation. Right, any type of inflation data. I believe I've stated this about like 4 months ago in the report as well for all my CFO Stream and Watch report members, readers, and private CFO Discord members. But the reason why the markets are not going to be focusing more on inflation is that they have the labor market to deal with, right? So again, the Federal Reserve has a dual mandate. What does that mean? They attack and fight inflation, and they need to take good control of the labor market. So their dual mandate is now coming up to, or becoming, a single mandate, right? A singular mandate, from a dual to a single. Why? Because inflation is really not their concern anymore, and inflation should continue to go back down, right? Overall inflation. And the PCE report will tell us that, especially the core PCE data, the core PCE data point, all right? That is literally the metric that the Federal Reserve uses. I've talked about this so many times. I mean, I don't think I need to repeat myself, but you guys should remember what that means, right? What I just said there. Basically, the only thing that matters from this point forward and what the markets will be reacting off of will be any type of data that regards the labor market. So like unemployment data, the UR, right? The UR percentage, jobless claims, and much more, right? And every single month's jobs report as well to see what the job growth is. So obviously the unemployment rate is going up, but am I concerned? No, right? I'm not concerned. Why? Because again, what happened to everyone who were saying that, hey, that the Federal Reserve should just continue to increase rates to finally, loosen up that very tight labor market. But that same group is now saying, oh my God, the Federal Reserve has messed up. The UR is going up way too high now. It's only at 4.3%. It's only at 4.3%. I mean, that's not even that high. But if it was at 5%, then we should be concerned, very concerned. But that same crowd is now saying that the Federal Reserve has messed up. They should have cut interest rates by like 50 BP or 75 BP back in July's FOMC meeting and stuff like that. I mean, that doesn't make sense, right? And so that group I'm not going to listen to, but I will take a listen to what they're saying just for entertainment purposes. But it seems like everyone is just trying to get at the neck of the Federal Reserve and just try to find some blame as to the current conditions that we're seeing with the labor market, even though this is exactly what the Federal Reserve wanted. These are the exact conditions that they wanted. All right, their dual mandate. It's part of their dual mandate, which is now becoming a singular mandate of dealing with the labor market. And so again, they just need to make sure that the UR doesn't go out of their control, and they need to just start easing financial conditions, right? They need to ease their monetary policy from their current tight monetary policies, and they just need to start cutting in a very slow manner, right? So that they don't restart and reignite inflation, right? Because we've been seeing some decent deflation for all of this year. So for IWM again, we just need to see that consistent higher highs and higher lows. And again, call skew is now at the lows, right? We didn't see the extreme call skew when we were recovering from this very quick correctional move back down, compared to what we saw in that initial breakout back in the early month of July. And so we should have a very steady move back up higher into the end of the year. Okay, so keep that in mind. And for all the CFO Stream Watch Report members and readers, you guys will be getting a lot more in-depth look into that, and I'll be giving you guys a bit more of an insight as to what you guys should be expecting in the next couple of months, especially into October for IWM. Okay, so now before I move on, Labor Day weekend sale, right? I told you guys that I will remind you guys this on Tuesday, but remember, 65% off, not just for 30 days, but for 60 days, for essentially 2 months. Okay, 65% off for 2 months to just try it out, right? This is an opportunity here of your lifetime, right? I mean, you guys should just try it out. If you guys are sitting on the sideline and just watching us, and just seeing these analysis, and if you guys have been enjoying these analysis that I've been giving you guys on the videos that I upload on the streams every single Tuesday and Thursday night, and if you guys want more, if you guys are yearning for more, and if you guys are looking to really learn in depth as to how we do things and how we're able to predict certain price action, certain price trends, make sure you guys join us by Labor Day weekend, by Monday, right? Before the markets open back up on Tuesday. So again, 65% off for 2 straight months. This is your opportunity here. All right, for all newcomers. It's only for newcomers, not for current members. All right, so all the newcomers, this is your opportunity. So again, I will remind you guys by the end of this stream as well, but this is an opportunity of a lifetime. Okay, and if you guys are interested, make sure you guys DM me on Instagram at ChartsFocus1 or on Twitter/X at ChartsFocus1. I have similar and same handles for my YouTube, Twitter, Facebook, and Instagram. All right, at ChartsFocus1, because we're focusing on the charts. Okay, our sole purpose and attention and focus is on the charts, right? Charts Focus 1. Very, very clever name, I would say. Not trying to, give myself a pat on the back, but and also it's an acronym, right? I can turn it into an acronym to CFO, which also means Chief Financial Officer. A little fun fact as to how I came up with my my name here. But yeah, so now with all this being said, okay, I still believe SPY has a lot of room left now. Okay, so we let's go back to SPY. Okay, so SPY again, if we do start to move sideways and we adhere to these 2 trend lines that I've drawn for you guys, that's fine. This is fine. All right, as long as we continue to bounce off of 550 and eventually break out, okay, like this, in a very nice way, this is fine. And I would love to take a nice long position if we do come back down to 550, which at that point, I would really hope that the Elite 21 SMA has fully caught up. Does that make sense? And so now, if that does happen, all right, let's go over some option contracts that will be very, very good to take. All right, let's do this together, guys. All right, bam. All right, so this is Yahoo Finance. I like to use this here and there. I really love their UI here. So I'm gonna go out to September 20th, right? So FOMC for September is from, I was wrong, I guess. From September 17th through 18th. That was from 19th to 20th. I'm so sure. I'm pretty sure that I saw 19th and 20th on their schedule here, unless they changed it recently. But hey, it is what it is. Okay, so September 17th through 18th is what they have here on their FOMC meeting schedule. Okay, the Federal Open Market Committee. If you guys didn't know what that means, if you guys didn't know what that meant for FOMC, but so I'll be looking at September 20th or either the last. Okay, actually not even the last. Let's just use September 27th. Yeah, September 27th. Okay, so first of all, let's take a look at the expiration date of September 20th. All right, so it's 2 days after the final day of FOMC and also the rate decision of FOMC, right? So the 18th. So what I'll be looking at is specifically 570, right? Because I really want to see the markets using the next major whole number level, 570, as a magnet level, and I want to see that new all-time high being hit. Okay, so oops, I think I did a little mistake there. Bam, let's bring that back up. Okay, so this is one contract that you guys can consider. Okay, 570, and look at how big the OI is. So there's a lot of big money out there that is also anticipating 570. But on the other side, okay, on the other side, for puts, you guys can't just focus on calls here. You guys can't be too biased. If you take a look here, look at that 550 strike for the puts, and look at the OI. Whoa, almost 60,000 in open contracts, right? And guess what? What does that 550 align with? Right here. This is the previous all-time high resistance level that we had back in the month of June, if you guys remember. And so this 550 level, if we do decide to pull back here and retest 550, that's completely fine. And I'm pretty sure the people who have been holding these 550 puts will be very happy. But for me, for us, for everyone else who are bullish into the first rate cut and we want to see that new all-time high being hit very, very rapidly, we want to see 570, right? We do not want to come back down to 550 and hang around there and then break below 550. We do not want to see that. We want to see a very rapid move back up to 570. Okay, so that's one contract that you guys can consider for the September 20th expiration date. And then for September 27th, the following week, right? Since we are going out another week, so we're giving ourselves another week's worth of time, I would say 570 is not too early anymore. I would say, oh, okay, I did not see this before, but interesting. Do you guys see this right here? Do you guys see this? For anyone who's still with me here, do you guys see this? Look at that. What is that right there, guys? This is the volume today. 5,000, almost 6,000 were traded, hopefully opened, and will be added onto the OI. But 5,000 on the 575 call strike contract has been opened and traded today in the overall volume. So I will be looking at this contract tomorrow then, because this is pretty interesting, and it's relatively cheap, but at the same time we don't have a lot of time. We only have about a month left, right, or less than a month at this point. So you know, September 27th, yeah, 575. I was looking a little bit more into you know, like 573 or just even 571, but I mean, this is pretty big. This seems like a pretty far away target. I mean, I was just looking for 570 from my personal perspective, because that makes sense, right? The markets want to go to that 570 whole number level, and it will always use the whole number levels as the magnet levels, especially during when the price is stuck in no man's land, or basically all-time highs. So yeah, 575 is very interesting. I mean, if we do get to 575, that'd be great, and that'll be even better if we decide to get the September 20th 570 strike call contracts. All right, that'll be very deep in the money. So obviously, I mean, it depends on your risk tolerance, Right? Obviously, it's all about risk management, risk tolerance. But 570 is obviously a bit more expensive since it's a little bit closer to the money. It's still very out the money right now from the current underlying closing price of 558.35. But if you take a look at September 27th, it's even further out the money, which is the reason why it's a lot cheaper, relatively cheaper, compared to the 570 strike call contract that expires on September 20th. So those are your options. I mean, I just saw this live here with you guys. So I mean, this is huge. Yeah, I don't see anything else. Yeah, I don't think I see even a vertical debit spread that's been opened. Maybe with 566, but that doesn't make sense. I mean, that's, yeah, for SPY, the option contracts. I mean, this doesn't make sense. Yeah, so 575. I mean, this can work out too. I mean, that's a bit out there, but yeah. So 570 will be my main strike that I want to be looking at on the September 20th expiration. Does that make sense, guys? Okay, so that is what I have for you guys for SPY, and why I want to aim for that 570. Okay, again, I just want to see, even if we do decide to just simply tap slightly over the current all-time highs of 565.16, which you guys can see here indicated by this yellow arrow. You know, even if you go to like 567, I'll be happy with that. I mean, I just want to see that new all-time high price print right before the first official rate cut for September's meeting on September 18th, right? So that's all I want, right? That's like the minimum that I want. And ideally, I really would want the price to go to 570 and hit 570, and then we can do whatever it wants, right? It can do whatever it wants after that, because I'll be out. Right? So again, very quickly for anyone who's just joining in now, I'm looking at 570 for September 20th, and then for September 27th, I might look at 575, may or may not. I mean, this is pretty interesting. I didn't expect to see this with you guys here during the stream, but this is a big buy. I didn't even see this. I was tracking the options flow today, and I didn't see this coming in. So, I'll check a little later after the stream. But yeah, now I do want to talk about Dell. Right? So Dell had some pretty rad earnings today. I mean, we saw their AI server demand coming in pretty strong today. I think it was like 3.2 billion. I think one of my members put that in my privacy of a Discord there, that data from today's earnings report. But that's pretty big, right? And if you guys remember, for anyone who has been following me since last year, okay, I haven't posted this back in I posted this back in March after the earnings report, but we were looking at Dell all the way down here. This was a trade idea, okay, an investment idea as well, long-term investment idea back in 2023. Massive macro resistance trend line here, descending resistance trend line, and a massive breakout, and ultimately it led us to here, okay, and had another secondary idea if people did not get in around here. Okay, so this is a very nice long-term investment. Okay, but today's earnings report has fully solidified my thinking that there's still another opportunity here if you guys haven't gotten in yet. I mean, I don't know what else I would need to convince you guys here, but let me just use the lines here that I have now down here. Okay, so very rapid move down along with the overall markets from, you know, that whole debacle from July to early August, the first week of August, right? We saw leaders seeing a lot more outflow compared to laggards, and Dell was one of those leaders, those tech leaders. So what happened here is now that the Dell was able to come back down, break below the daily 200 SMA, and retest a major previous resistance area, an all-time high area as well, of 87.20, and it had a very nice bounce. And along with the markets, after the first week of August, we had a very nice recovery, nice V-shaped recovery. But now what we have here is a very textbook bull flag, right? It's a very flat bull flag with a flat resistance level at 114 and a flat support level at 107.50. And so with Dell, welcome guys. Hello, hello. What's up, villain? Hi, Mr. CFO. Hello. Welcome, guys. So, wow, I see a lot of newcomers here. Welcome, guys. Hello, hello. To anyone who's just coming in now, I've been streaming for about 35 minutes, so make sure you guys watch the replay. I really recommend you guys to watch the replay of any of my streams because I talk about very important things like tonight, so make sure you guys go back to the replay. I would highly recommend you guys. You guys will not be disappointed, really. 100% guaranteed, 1000% guaranteed you guys will not be disappointed at looking at the replay. Okay, so again for Dell, with the very nice bull flag here, what we have for Dell, I believe, is after hours it had a very nice pop to like 119 if I remember, and then so far after hours overnight we're seeing the price sticking around this resistance level. So after hours it closed at 114.40, but I think overnight it's staying right underneath 115, or I think it is at 115 currently. But that's good because it could provide us with an opportunity tomorrow if we do decide to come back down and fall back within the bull flag range here of 107.50 to 114. There's a good chance that we can grab some calls, and also we can probably see a good deal of IV crushes on near-term option contracts, so that can provide us with cheaper contracts as well tomorrow, since you know, we did see a little bit of an IV pump into the end of the day for a lot of the call and put contracts. So most likely tomorrow I will be looking for either a vertical spread on Dell or maybe even just a butterfly spread. I haven't done those in a while. So, and I will obviously put more details for my private CFO Discord members and all the CFO Stream and Watch report readers. Okay, so hey Dustin, what's up, man? Nice to see you. So guys, for anyone who's just joining in, make sure you guys hit that subscribe button, and on top of that, make sure you guys hit that notification bell. Okay, so it's good to see you, Dustin. So you know, again, as a quick summary for Dell, I will be providing kind of a little bit more of a detailed potential trade that we can take on Dell. It's going to be a longer term one as well, I believe. I'll be looking at most likely like middle of 2025. I mean, this one's definitely a long-term play. I've been saying that. Right? I've been saying that since like April of last year. Okay, this is our first entry point, 43.10. Okay, so yeah, that's pretty much it, guys, tonight. Again, just a quick summary. SPY, I'm expecting 570. I don't know why I have the Heiken Ashi candles, but there we go. I mean, even with this, you guys can clearly see the very nice momo bull flag that we're forming here. But this is what we could potentially see. All right, this is just a rough sketch of the price path that I've had for SPY since Tuesday, and then now I've drawn this tonight to show you guys that the possibility of this. Okay, but I want all this to happen right before September 20th, the expiration date for our contracts, which I've shown you guys as well. Again, for SPY. Okay, let me just quickly review this with you guys. Okay, let's go to, there we go. Right, so September 20th. Okay, 570. All right, very simple target. Okay, 570, and the premium that it ended at today was $251. Very simple. But if you guys aren't really vibing with the September 20th expiration date and that contract, I, during the stream with you guys, was able to figure out that, hey, there's a large buy of 575 strike call contracts of nearly 6,000. So tomorrow, I really want to monitor this contract and see if this volume is able to carry on over to OI tomorrow. All right, the open interest. And obviously the 575 is a lot more cheaper since it's a lot more out the money compared to 570, even if we do have another week's worth of time on these specific strikes of these contracts. Okay, and so this 575 call contract can most definitely become useful. Just take a look at it. You know, if you guys want to monitor this one, you guys can. But this is pretty interesting to me. Very nice good buy. 566 as well today. I mean, this is fine too. But this one really intrigues me since my initial target was 570. I told you guys this on Tuesday, and I told my CFO Stream Watch readers and my private CFO Discord members 570 back in on Sunday night with the report and the technical analysis video as well. So yeah, I mean 570 is my main one that I'll be looking at tomorrow, but I'll be making sure to check that 575 strike call contract. All right, so before I leave you guys here, remember, we do have the Labor Day sale, the Labor Day weekend sale of 65% for 2 straight months, right? For 60 days. Usually I give you guys the 50% discount for your first 30 days, but for this special Labor Day weekend sale, I want to give you guys a 65% discount for your first 2 months. All right, this is your time to take this opportunity and join us and kind of see how I'm able to, you know, view and analyze the markets and give you guys a very detailed top to bottom overlook as to what the markets are doing, right? I mean, I'm not really focusing on any specific economic data or equations or anything like that. I'm just focusing on the markets, right? On the actual technical analysis of the markets. So if you guys are interested in that, and if you guys are finally looking to take control of your trading journey, make sure you guys DM me at ChartsFocus1 on Instagram, or on Facebook, on Twitter, but mostly on Twitter or Instagram since I'm very active on those 2 platforms. Make sure you guys DM me, okay? At ChartsFocus1. That is my handle for all of my social media platforms that I'm on. Okay, and you guys will receive that 65% discount code just because you guys have DM me. All right, and so there are different tiers as well. If you guys want to get a bit more intimate with me, as in not in the love sense, but intimate as in you know, trying to get a little bit more knowledge in and getting a little bit more training from me. There are one-on-one mentorship sessions that I provide you guys as well. So if you guys are interested in that, please let me know. The 65% discount code will also apply to that as well, depending on which tier that you guys choose. All right, so that's a little bit of information that I want to give you guys and just put out there for everyone. So yeah, don't forget about the Labor Day weekend sale. I'll be posting it about the sale on my Instagram and Twitter as well. So make sure you guys are following me across all the major social media platforms that I'm on, like Instagram, Twitter, and of course on YouTube, right here. So if you guys aren't subscribed yet, please subscribe. If you guys found this stream very, very informative, but most importantly, applicable. All right, have a great rest of your night, guys. Good luck tomorrow, and I'll see you guys on Tuesday. Thank you so much for watching.